The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. Here are your headlines today. Chinese industrial data beats expectations, but retail and house price figures come in soft, highlighting the two-speed recovery in the world's second largest economy. US stocks hit fresh intraday records, with the Dow briefly topping 40,000 points for the first time, but the rally fades into the close.
ECB board member Isabel Schnabel pours cold water on the prospect of back-to-back rate cuts, with the ECB Vice President Luis De Guindos telling this channel the outlook past June is much more uncertain.
We have been as clear as the decision that we are going to take in June with respect to the future evolution of rates, and that will be data dependent.
And HSBC shares slip in Hong Kong trade on a report its largest shareholder, Ping An Insurance, is considering cutting its stake in the lender.
Good morning. Big focus on China today as we take a look at the data and also announcements just hitting the tape. The Chinese industrial production numbers surprised to the upside in April, rising 6.7% on the year. However, retail sales came in soft, rising by 2.3%, the slowest increase since late 2022. China also saw its fastest rate of new home price declines in almost a decade in April, falling by more than 3%. The figure represents another unwelcome report for policymakers as the country seeks to revive its ailing property sector. Officials will reportedly hold a state council meeting this morning to discuss aid measures, according to Bloomberg. We have some comments crossing the wires now, and there's a big moment, feels, this afternoon. Given we have not seen stabilisation yet in the housing or property market, there is a view that further measures have been required, and this is a glimpse into what we're hearing now. The Vice Premier has said that must effectively ensure delivery of homes, this according to Xinhua. Local governments can purchase some homes for affordable housing at reasonable prices. So perhaps intervention here by the local government in terms of bringing that stability. Local governments can purchase existing land as well, according to Xinhua. The Premier going on to say, we will continue to fend off debt risks of property developers. They'll push ahead with 3 major projects of construction of affordable housing, urban village renovation and public infrastructure. Local governments, developers, financial institutions should coordinate and give full play to real estate financing. So direction here from some of the mechanisms around financing will let the property financing mechanism and relending policies push forward home deliveries in a forceful manner. Efforts should be made to categorise and promote disposal of sold and difficult to deliver housing projects. So what they're talking about here, don't forget, a huge stockpile of inventory is now built up, property that's been unsold, that's yet to clear out, and of course that depresses the pricing. In addition to that, homes that have yet to be completed, which is even worse. So people have put down deposits waiting for these homes to be delivered. Now they're stuck in the system and yet to be finished as well. So there's multiple different aspects today that the Chinese government is trying to target here.
Just a quick line from the PBOC as well. The Chinese central bank conducting 2 billion yuan, that's around about $281 million US dollars of 7-day reverse repos at interest rate of 1.8%. The PBOC saying this is an aim to keep liquidity reasonable and ample in the banking sector. Reverse repo, of course, is a process where the central bank purchases securities from commercial banks through bidding with an agreement to sell them back in the future.
So let me just weave this back to the data, because as we look for some sort of improvement on the mainland market, the reality is the property market is so hamstrung. It's been an undertow on growth. And, you know, typically, what was it, a fifth of the economy back at its peak was what we saw from the property market. So let's get out to Sam for more colour on the data and just what these announcements also mean in terms of that goal of hitting growth rates this year. Sam.
Very good morning to you, Karen and Steve. So these lines that we're getting from the Vice Premier here seem to be consistent with the expectations that we were going to hear from the housing and finance regulators today on some sort of clarity off the back of reports that they were going to be looking to mop up and deal with the inventory and some of these unsold homes. I was listening to some economists earlier in the week suggesting that the number of homes is eye-watering. They could actually house the entire population of Germany. So this is a very encouraging step, it seems, certainly from the authorities. It seems to be another nudge to the banks as well to sort of lend their support here, because this reporting this week had suggested that they were going to be turning to the local governments, the SOEs as well, helped out by the state banks. But there has been a degree of hesitancy, of course, among some of these lenders, because they are wary of extending these loans and increasing their exposure to these cash-strapped developers. But this seems to be another sort of top-down sort of message to the banks, not to mention we have the issuance of the 1 trillion yuan in long-dated special treasury bonds as well, which the banks are expected to buy as well. So this, no doubt, is a very encouraging announcement today, particularly when you look at the affordable housing. This is going to look at sort of the poorer demographic as well, to try to provide them with some sort of social housing. So no doubt we will expect to perhaps see a bit of a rally off the back of this, given that we did see a rally on reports that this was going to be happening. But this comes off the back of that new home price data, which continued to show a decline, down 3.1%. And that was the worst or the fastest pace in terms of declines we've seen in around 9 years. So this seems to be to try to address some of those concerns, but the big question still seems to be about the implementation and where all the money is going to come from, and then also to try to encourage some of that demand as well. So economists we've been speaking to today said that it will take some time in terms of this stabilization. Perhaps not until next year we'll start to see this reflecting in the numbers. But it was very much, you could say, and economists have suggested, a complex set of numbers that we got today in terms of the divergence across the sectors, because it was certainly encouraging on the supply side with the industrial output numbers. That was a beat, but not so much on the demand side. When you look at the retail sales, which is of course a barometer for consumption, that was a miss. And then not to mention the new home prices. And so what that is certainly telling us is that while the factories are very busy right now because of these major industrial policies, because of some of this front loading as well that we've seen, we saw that in the export numbers, the consumer perhaps is not as busy as the authorities would like them to be, and they are still holding back on their spending, and particularly when it comes to the property sector as well. The fixed asset investment, that was slightly slower than what we'd seen in the previous months. That was dragged down by, of course, the investment in the property sector, still minus 10%, but also down to the slow issuance of these government bonds. But certainly the implementation and where some of this funding is going to come from is going to be key in terms of some of the announcements that we've just got from the authorities. Back to you.
Sam, excellent coverage. Thank you very much indeed. A couple more lines from the PBOC. The Chinese central bank to lower interest rates on Provident Housing Fund, adding that it will lower them by 25 basis points. China to abolish the lower limit of interest rates for Housing Provident Fund for the first and second homes at a national level. Local cities in China can determine on their own whether or not to set lower limits on commercial bank mortgage loans as well. And China's financial institutions can reasonably decide specific interest rates for each mortgage loan based on bank's own situation and client risk, according to the PBOC. Let's get another voice on this now. Delighted to say, joining Karen and myself on Scorebox is Xiaolin Chen, who is head of international at Crane Shares. Very nice to see you. How are you?
Likewise, very well. Thank you.
There is so much going on, so many things to say as well. One thing I'm going to add in is from your copy about talking about the rally we've seen in Chinese asset classes recently on the back of various initiatives. Well, it seems from the wealth of information we're hearing today from the Vice Premier and indeed from the PBOC that they think there's more work still to be done to galvanise the consumer.
I would agree with that statement, particularly now the Chinese capital markets start to show the sign of recovery, really a whole backlog of all the policy announced since March last year. Give or take, probably about 38 major policy, including one of alike today's announcement by PBOC of cutting mortgage rates, cutting the down payments to support real estate sectors. All of that didn't get much market attention,
Yeah.
while investor is recovering their sentiments or confidence towards investing in this asset class. But almost 12 to 16, 18 months later, now investors start realizing the rotation to reward the fundamentals to
Is
start.
this a house built of straw? Because is it being built on debt upon debt? You're encouraging people to borrow more money at lower interest rates. This is something that President Xi and his advisors have been loath to do, to pile more debt on the state, on the municipalities, on the individuals, on the corporations in order to get out of this consumer malaise as well. Are we now seeing a reversal of that policy or that stance, and actually they're saying increased debt as the way to get through this?
For China's economy to substantially rebound from here, credit need to pick up. Period. End. Corporates, household at this level is very low.
But you need appetite for that credit as well. And one thing that some of the greatest minds have been pointing at, saying, look, the Chinese know that they're seeing a balance sheet recession at the moment, whereas consumers have the money potentially, they just don't want to borrow more money as well. Regardless of the incentives to borrow more money, they don't want to, because they understand that they don't have a social safety net, so hence they have to build up their savings if indeed they're not going to make money from the property sector.
Property sector will not be the wealth creation going forward.
Right.
I made it that very, very clear. That's my view. Okay. I think you're absolutely right. You need to have a catalyst for the corporate to say, there you go, I'm going to start to borrow, start to expand my line of business. But they haven't really started that. I agree with you on that. Credit pickup in February, March show a sign of uptick, not at the level they would like to desire. Today's policy is one, to provide social stability.
Right.
The sold and finished home, finish it, okay? And then the government step in to say, I will put a floor into the space.
So can we talk about a timeline here? Because the property woes have continued quarter after quarter after quarter. So I think the market has been hoping for some sort of prop to come in, but it simply just hasn't appeared. And if we look at the numbers Goldman Sachs produced this week, they're saying saleable housing inventory was valued at roughly $1.87 trillion at the end of last year. Saying, and because some of the construction not been finished, different metric here, would require about 5 trillion yuan of capital investment. These are huge numbers. So as we talk about measures today to lower the bar on mortgages and to get local governments in to buy up some of the housing stock, how long is it going to take to turn this around? It feels like it's still a long journey here.
Until the retail investors or the household start to stepping in, these kind of measures really just a symbolic of psychologically giving the investor to say there's a floor.
Does it happen this year, do you think? Do you think we see a turnaround in 2024?
There's probably 2 or 3 major milestones need to happen. For instance, those real estate developer that were or still is in trouble need to declare bankruptcy. It's the open story, they are bankrupt.
But
They're just winning the time.
The Chinese authorities said that this year. They said properties that need to go bust or that must go bust, need to go bust, should go bust.
This year,
but we
I
haven't
think,
seen it, have we, necessarily?
Exactly. This year, they should make that happen.
Through the courts?
I think the company themselves to declare such action to make it happen. Because some of the companies really just winning the time to finish the unfinished projects, which they should be done by this year, given the timeline required. If that is the case, all this relaxation, they should do massive more relaxation on the people who live in the tier 1, tier 2 city that are not eligible to buy the house because of certain identity systems in China. If they remove that more in a massive way, that's actually the people who hold cash, who can buy a house, are not eligible to buy.
So to me, there's another consequence today on what we're hearing, and this is on the banks. So the banks have had a fairly large exposure to the property market and, of course, to the consumer. If we get some movement, presumably that does something for volumes on the loan side, but equally, the banks could be sitting on even lower margin business and potentially on some delinquent exposures here. How do we think about what's still coming from the banking sector?
Banking sector, real estate has been consolidating for nearly 2 years. I think real estate sector has been, a lot of the pricing downwards has been pricing into the market today. That's one. Government stepping in definitely help. Government steps to buy definitely help the stocks. The third most important thing is really the real estate sector got to be consolidated itself. Price will continue to fall. If you ask me, for the most major 70 cities, they track in the index, price continue to fall, particularly it fall in April. The other things could help the bank a bit is Sam mentioned this, the ultra long dated bond issuance started this week by Chinese government, the ultra long dated bond. the uptake on that was massive. Okay, when this issue, a lot of people take it up, all the quota get issued, which is a great sign that bank and also other investors still looking for yielding alike instruments that are away from real estate markets.
Let's move on to the stock market, because as I mentioned when we introduced you, that actually we have seen this solid rally, and these are the year-to-date moves, are they? Okay, so I mean it stalled a little bit this year on the Chinex and the Shenzhen, but off the lows we have had a rally as well. Yep. What is that built on?
It was probably 2 or 3 factors on that. One is all the accumulative, the macro policies was introduced as one. Second, corporate is in China start to deliver strong earnings. Like you see the tech companies that was released their earnings for this week. They're still on the high single digits for their consolidated onshore business, double digits on the international basis. Alibaba international business up 60%. The quarter before that was 44%, and before that was 55% on their international business. So the corporate is back on their own foot to deliver results. And third, probably last one, is the corporates are start to heavily repurchasing their shares back, which is massive. Some of like Alibaba is probably shooting around 15% of their overall share buyback.
Goodness.
And also introducing dividends as a so-known e-commerce and technology company. So start to create more values for shareholders that definitely get rewarded by investors' appetite.
So I'm just going to pivot away from the domestic picture to the international one, because we've seen President Xi meeting with President Putin this week, and even today Vladimir Putin has arrived in Harbin. We have some live pictures coming through now, live from the ground, and in this commentary that we're hearing on the stage, Putin has said that Russia-China cooperation helps economic growth of both countries. Putin going on to say our strategic energy alliance will get even stronger. And of course, when he's in Harbin, we're talking about some of the gas pipelines and delivery of that energy product. In terms of Putin saying Russia welcomes localization of Chinese businesses. We know yesterday we were talking about the Russians saying that EV cars from China were welcome in Russia. I want to pick up on this conversation and what the relevance is. I mean, the West has been looking to this conversation in the hope that perhaps President Xi might say something helpful to bring about some sort of remedy around the war in Ukraine, which seems to be an endless war at this stage. Equally, many are concerned that this suggests that Russia and China are getting even closer together, which worsens the geopolitics. So how are you thinking about this visit from Putin in China this week?
Obviously, Harbin is very much the city, the province right northeast in China. So it's really border to Russia. I was from there. That's my hometown, from Harbin. Historically, we always import like a gas, natural, we do trade with them, that's historically. So some of the trades were there for a very long period of time, over the last probably 40, 50 years, it was always there. Obviously, I think with closed doors or even with openly, I think Xi Jinping would have to relay a lot of the message for a long-term sustainable relationship. Also, I think from all the proposal President Xi Jinping has been brought out to the international stage was he proposed the peace agreement to Putin. I don't know with the closed doors what they discussed, but from a trade perspective, thus far, obviously, we don't have all the information needed for the agreement side on the trade, but so far they touch base on the spaces really they have been in place in before for trade, probably about just a continuation, re-enhancement, saying we are doing this kind of trade. EV, China has been sold some of the EVs to their neighbors, historically the most as young frontier, including in Russia, within the Asia area. So I think it's really nothing step up from catching in terms of deal agreements thus far, but of course we will assess more details.
It's been an absolute joy having you here today, because we've had so much information and you've given us so much more context on that information. So Karen, I'm very lucky to have you here. So thank you very much indeed for joining us. Xiaolin Chen, who is Head of International at Crane Shares. Right, well, coming up on the show, another day, another new record high for the Dow. Lots of comments about this, some good, some bad, but the Dow briefly touching 40,000. Who cares? That's the question. Who cares? I mean that, just chucking it out there. Fueled by an encouraging inflation report. We'll discuss that and who actually does care. Plus, can Richemont buck the luxury sector slowdown? We'll break their full year results this hour. And Xpeng, talking of all things Chinese, expands its footprint into Hong Kong and Macau as the EV competition heats up. We're going to speak exclusively to the group's vice chair, Brian Gu. That's coming up at 9:45 Central European time.
Ambition to me is about doing better.
I think ambition creates a pathway.
The best advice I can give to someone starting off a career is don't have a career, have lots of careers, try loads of different things.
Talk to people and put your ambition out there.
I don't feel that I've hit peak ambition because it's a learning journey.
CNBC is where ambition meets opportunity. What does living ambitiously mean to you? Hear it from our CNBC anchors, reporters, and global business leaders on CNBC.com.
Markets yesterday having the debate that we were having around the set as to whether we're going to get any rate cuts, whether there's any immediate change coming, but the prospect too that we're unlikely to have any rate hikes. So just recalibrating portfolios is what we saw yesterday as the market soared through 40,000 points on the Dow for the first time ever. Before turning shy as investors took stock of that, thought, is it a good thing to keep on seeking fresh records as we still have a lack of clarity around monetary policy at this stage? It was the same story for the other major boards as we managed to move higher into these peak levels, intraday highs on the S&P 500 at one stage, and also fresh all-time intraday highs on the Nasdaq before the reversal took place. And in terms of major stocks then leading the market south yesterday, Meta for the Nasdaq, Amazon for the S&P 500, so two major tech names there, the undercurrent, and for the likes of the Dow, a cyclical name, Caterpillar, was leading to the downside. So just telling you again about some of the big drivers that investors were taking stock of yesterday and pulling back away from some of those peak levels. But let's just talk about how quickly we've managed to get to the 40,000 handle. You can see if we change over the chart, you can see some of those gainers. This is the gain since the Dow crossed 30,000 points back in October 2022. So here, as we're in May 2024, we get through the 40,000 point level. What's been behind those gains? Well, Microsoft, probably no surprise to anyone, that the AI story that Microsoft has been telling us has driven that stock up. Caterpillar, I mentioned the cyclical name here, so read in on that cycle. Goldman Sachs, typically one of the big drivers for the Dow when you see those peak levels, and again in play. Salesforce, we saw that a day earlier, was leading the Dow higher. American Express as well, and perhaps that is the story around the strength of the US consumer this time round, and we're seeing it playing out through the payments system. I want to take you to Treasury markets and the wash up from the CPI this week, the commentary from Fed speakers. We now have the yield a little bit lower, 4.77 at the short end, and we're just lightened up a little bit at the 10-year, 4.37. As a result, the dollar has been on the back foot over the course of this week, about 2.5-year high for euro versus the dollar is what we've witnessed during the trade this week. Morning session, dollar is trying to claw back a little bit of territory, and you can see that's leaving cable on the back foot. We're 126.5 roughly and 108.5 on euro dollar. In the trade around dollar yen, we're 155.82 roughly, up about 1/3%, and dollar also gaining versus the yuan as we digest all of that data out of the Chinese market today, Steve.
Yeah, you've covered a lot of ground. What we'll do is we'll have a chat a little bit later on about the Dow 40,000. I haven't got time now, but it really is a useless measure compared with the S&P. I mean, there's no Exxon, there's no Nvidia, and it's utterly arbitrary which stocks get in there. Let's move on. US weekly jobless claims fell to 222,000 last week in the latest sign America's labour market remains tight even as job growth is cooling. New claims had jumped to an 8-month high the week before, although data showed that was largely due to a rise in applications in the New York state during the school holidays. Other data released Thursday pointed to a drop-off in single-family housing starts and factory output in April. So did we learn anything from the Richmond Fed President Thomas Barkin? Well, he said the latest data shows the labour market, is in good health. I think, did we know that? Let's see.
The overall number on the labor market, to me, it's normalizing, and that's good. And we saw some really big numbers back in December, January, February, but we think we've come off of that. You've got unemployment, 3.9 maybe edging up. You've got initial jobless claims we saw this morning, not low by historic things, but maybe edging up. I think you're seeing a normalizing labor market with the exception of skilled trades.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.